Hello, and welcome to the Consistent Profits Podcast, brought to you by Inside Out Trading and Brian McAvoy, where the focus is on consistency. Because when you have the consistent part down, profits become easy. Well, welcome everybody. This is Brian McAvoy with Inside Out Trading. And today I'm really excited to be interviewing Norman Hallett of the Disciplined Trader. Welcome, Norman. Glad you're here today.
Thank you.
Yeah, Norman and I have known each other for a lot of years. He was kind of foundational in helping me get off the ground back in 2006. And so that you know, just some background on Norman himself. He's been a trader and trading educator for over 4 decades. Been around a while, and I'm just sharing this from you as far as his general background. But from 81 to 88, he ran one of the largest options firms in the country, and later worked as a commodity specialist for Paine Webber. Maybe you may remember that name or not. Big time company years ago. In 1991, he formed the Hallett Group, managing large trading accounts for individual investors as a commodity trading advisor. He currently owns and operates the Disciplined Trader, founded in October 2000, where he focuses on helping traders with the too often neglected area of mental and emotional control and the building of simple trading plans. Norman is a popular speaker at Trading Expos and countless international venues, and he has over 1 million views on his 4-minute drill for traders, where he gives tips and techniques for being a more successful trader. And actually, over the last about 20 years, he's helped directly and indirectly over 100,000 traders. So definitely making a dent in this space. And Norman, again, thrilled to have you here, man. It's just, we've known each other for a long time and a lot of fun to talk to. Glad you're here, man.
But listen, but what has he done for me lately? I mean, that's really the important thing. What has all that culminated into? I think you and I are probably we've been around the longest in the area of the mental and emotional capabilities. Don't think that I just can't remember anybody who's actually stuck with it, because there's a lot of resistance. I mean, people resist. I'm not the issue. It's the market's getting me again. So it's hard to listen. I know it was for me. I spent a lot of years losing. Not a lot, maybe 4 or 5 years losing. I was, and that at that time, I think a futures round turn was $100, not $1 or $2.
Oh yeah,
and so when
this has changed a lot over the years.
Yeah, so I remember running to the ticket window, and I was managing guys who were managing option money for clients, and I was responsible for making sure that they did the right job, and I'd pull them into my office and go over their numbers. But when I was done with them, I was just going back and forth from my office to the trading window, buying 10 contracts of soybeans, and it was crazy times. At $100 a round turn, money was flying around in those days.
Oh yeah. Well, back in those days, trading online really was not existent for everyday people. You pick up the phone and call your broker, or you're going to a window.
You're more of a geek than I am. When did it actually start where you can actually trade online, not online, but through a computer and so on?
For having to call your retail investor, I think it was around like 03 or 05, somewhere around there. Mm-hmm. Yeah, and there weren't very many places where you could do that. It was still, the standard was still pick up the phone and call your broker. And around 2009, 2010 was really when it started to become popular. I don't know if you remember or not, but around like 08, 09, 2010, in the internet marketing space, because remember, the internet was still evolving. Mm-hmm. I remember on the Warrior Forum, which is like a forum for internet marketers, man, in 09, oh my God, it looks like Forex was the thing. And all the marketers were just pouring into the Forex markets because that was like the rage. And now you can trade online. And it's like, so the marketing was so easy, and it wasn't long.
And all you need is $500 to open an account.
$500, and the leverage was insane. You get like 400 to 1,000 to 1 leverage. It's like, oh my God. And
love it.
Yeah. So, but it's been really interesting watching the evolution of the whole industry.
It has.
People-wise, things are a lot different than they used to be. Yeah, I mean, because you figure back in the day, I mean, one broker I ran into early on, it was $200 a round turn. And when you're hitting that kind of commissions, you got to be a lot more. You got to have your game a whole lot more up than where that's almost basically zero commissions nowadays. Mm-hmm. because it's a whole lot harder to make it when your commissions are that much.
Yeah, no question about it. I mean, we had, the account had to be at least $50,000. Otherwise, the whole thing didn't make sense. All you need is a few losing days and you were down 5,000 in commissions,
Okay.
So it, of course, and even in those days, I don't know what they do right now, but when I was managing money, I was a commodity trading advisor and took accounts of 250,000 and more. And we earned 20% of what we profited, which was a good thing. We did very well when you did well. At times where you started with an account and you went the wrong way, if you got a few percentage deep, you would say to yourself, well, I'm not going to make money until I get back over that zero line. So, you get more conservative. A lot of guys did it the wrong way. They say, well, now it's time to get aggressive because unless I cross that finish line. So it was, listen, it's still kind of the Wild West in a lot of ways because of the leverage. I think the lack of appreciation of the leverage really, I think, opens people's eyes when they start doing it. I always say, trade small, think big, but trade small, because it'll come to you. I was trading the Japanese yen today, and it's just amazing how that market tends to trend all day long in the same direction. So if you put on a small position right from the beginning of the day, when your signals give you the direction for the day, and have a reasonable stop, you can stay in that position all day long, without fighting anything. So I think people need to, do a little understanding of the markets they're trading, how they act. I think every futures contract, which is what I usually trade. Again, I grew up on options, but boy, when I saw that every dollar up was a certain amount, every dollar down was the same amount, but the other way, I said, boy, that is clear as a bell. I don't have to worry about premium prices where the market goes up and nothing happened to my premium. What the hell was that about? So this, I knew exactly where I was at all times. And that's what I love about the futures market. I mean, there's slippage, which is very minor now, even during reports. It's amazing how they can fill you very close to stop even some wild number that comes out at 9:30 or 8:30 Eastern time. But, it's the market has, it's calmed down. It is the Wild West from the leverage standpoint. But if you have an appreciation for the leverage, there's no reason why you can't figure this thing out, from a trading plan standpoint. I'm sure, people that come to you with trading plans, how does it look? You see them all day long. And the ones I see, I'm not going to say the majority. I mean, all of them I think I can tweak a little bit, but the majority will make you money if you follow it. Some better than others. A lot of them will, many of them, usually that's not the problem. The problem is up here, following it. And that's where you and I we're almost the last bastion about 5 to 6 years ago where nobody cared about the mental and emotional game, things had changed in our industry. I'm glad you're still standing, and I'm glad I'm still here. So.
Yeah, likewise. Well, and one thing you just touched on, and to me, this is just kind of a common sense thing. I mean, because and it still blows me away, and I get it from a sales marketing standpoint, but it still kills me how there are so many people out there that are still selling strategies. It's like this industry, if you actually take it back, to its roots, it's been around as long as the stock market, or actually it goes way back even before modern times, as far as exchanges and buying and selling and all this kind of stuff, trading. And so but even since just over the last, say, 50, 60 years, the markets have basically existed the way they have, even though technology has advanced. And so there have been strategies around forever that they work. They make sense and they work. And so, why people are going out and, dumping $5,000 or $10,000 on new strategies, when if you look at it, it's like, no, it's just the same one. I can tell you, yeah, it's basically, same one I saw 50 years ago. I just kind of, put a new sticker on it saying, new packaging. And
truths are truths,
Yeah, but I mean, like I said, everybody's thinking it's, the magic is in the strategy, and it's not. And
I wrote something down today. Where is it? it was about strategy because I knew I would be seeing you today. Yeah. You know, it's akin to what we're talking about, where strategy is. You know, that's why I think that what we've done, I mean, our focus has been the mental and emotional conditioning and of traders. What was the missing piece for most traders, but we've taken a different tack. I go inside the head with the subconscious mind. You do the complementary thing, and they're both just equally important, of making sure that your strategy is something that you understand. That was my note. If you understand it, it's much easier to follow. People buy these strategies and they have no idea even what a moving average is, you know, or
Oh,
what the difference is between a moving average and an exponential moving average.
oh yeah.
And why it's better in some markets than other markets. If you understand the components of what makes your strategy, then you go and you believe in it, test it. That's the process, as opposed to believing somebody who shows you that they have 98% winners. Somehow it's not happening when you get into the trading room because it was a bad day. But the idea is that you know, if somebody hands you a strategy that's even one that works,
Mhm.
um, somehow when you get it, it doesn't work because you don't understand from where that strategy came, and because of that, you have doubts every time you have 3 or 4 losses in a row whether you got sold again, you know, whether you got taken again.
Oh,
So what you do and your focus about defining strategies, and not only defining strategies but matching the strategy with the person, because everybody is different.
mhm.
And so when you do your coaching, you know, there's of course that element of matching the strategy with the individual. I mean, somebody's not a patient trader. You can't give them you can't run a strategy that has two signals a day on an 8 hour trading day. It's just not going to work, you know.
That's true.
Uh, and so, you know, strategy matching the person, understanding the strategy from whence it came, because we're both engineers. You were an engineer a little longer than I was. I actually practiced engineering for about 2 weeks. I went to a school that was work study, where we had the University of Cincinnati, where we went to school for a quarter and then we worked for a quarter for the
Oh,
first, and it was a 5-year school instead of the 3 years. So the last job I was on was measuring guardrail on the Long Island Expressway with a guy that was retiring. I had like a clicker measuring. I said, no, this is not for me. So I went into teaching. I got my license to teach, and I was teaching mathematics in Cincinnati. I'm not Cincinnati, but San Francisco.
okay.
That lasted for about 6 months because they caught me. I would teach replacement theory through blackjack. And I had a tough, you know, they gave me the tough class with everybody had, you know, at that time, tattoos were not only, you know, criminals and crazy people had tattoos. You know, now I'm thinking about getting one. So I must be either a criminal or a crazy person, but I'll let you choose. So the idea is that, you know, the toughest, they would come to my class
Right.
without question because, you know, I have them sit around the desk. They can't touch the card. There was no money exchange. But I would take a hit or not take a hit, and take a hit and not take a hit, and why? You know, well, because you counted there's so many tens left in the deck, and therefore it was more favorable that you bust. So I'm going to, you know, stick with what I had, you know. And they would come to I said, boy, I went home one day to my wife. I said, I'm a great teacher. You know, look at what these kids couldn't get them. Now they're coming early. Where are you, Mr. Hallett? They're telling me I'm 2 minutes late. Anyway, I looked through the window the next day, and I was out on the street. You can't teach blackjack. So, you know, but there's an example of understanding. I mean, these kids had math was the last thing they wanted to do.
Mhm.
But if they could understand a few things about math, like replacement theory, which is a great theory to understand anyway for a lot of other things, but if they can understand replacement theory, you know, they may be able to make some money, you know, with that. And so, you know, understanding and then it makes it much easier to execute. That's kind of your ballywig. And of course, I can't, I can't be in this part of the business without mentioning it or doing some of that, as you can't talk to people about, meditating and deep breathing before they start and things on that. Or because, hey, if you don't have the subconscious mind working for you, it's going to be working against you, all the negative news and so on. So I've always been into the meditations and getting the mind to be focused and so on. You put that in combination with what you do, and that is the process and understanding the process and matching the process. I mean, you've got a trader that's going to do well. It's just that sounds like a lot of work. People, so and it doesn't sound like you make any money with it. I mean, if you give me a good stock, I can make some money, but you give me a meditation, all I'm going to do is fall asleep. So
Yeah. Yeah. How fun.
anyway.
Well, you said a mouthful with the understanding what you're working with, like, and with indicators and stuff like that.
Mhm.
That's one that blew me away years ago when I first started running into that. I'd be talking to people and ask them, okay, well, why are you using that indicator? I don't know. I like it. Or, I heard about it here. And it's like, so what does that tell you though?
Mhm.
How's that actually helping you in your trading? I don't know. And it's like, then why are you using it? If you
Mhm.
don't even understand what it is or what it's telling you, why are you using it?
And you don't have to understand it in rocket science. You just have to know that an exponential moving average is the same 8 periods of time added up and divided by 8, but weighted toward the more recent days so that it's somehow more pertinent to what's going on today.
Mhm.
Makes some sense, kind of like that. So what markets would be good for that? Certainly markets, like crude oil, and even now um, the um, uh, the S&P and Nasdaq, any markets that seem to react on news or have high volumes, these are great markets for. In any event, the idea is that you got to understand why you're doing what you're doing, and that really is a major part of what leads to be able to stick to your plan, and that's all we have. We have a tested plan. If we stick to it, we know it, which is why one of the things that I ask traders to do is to always review yesterday's chart before you start trading. So if you're trading like I do, the 5-minute candle chart, I'll go back to yesterday's markets that I trade. And I've been trading primarily the Japanese yen, euro dollar, and the S&P, and a little bit of gold,
Okay.
sometimes copper and crude. But I'll go back to what I was trading yesterday, say what I plan to trade today, and I'll go back to that chart and I'll mark it up with little arrows. Here's where and then I would see how I would have done. And I would have done very well. And the vast majority of the time, if you have a decent trading plan, you're going to see that the trading plan worked yesterday very well. I mean, you named all the things that I've done in my career. But what have I done for anybody lately? Where am I at now that can help people? So where's the market now? I mean, it's great that it had all these great years in the turn of the century. But yesterday was the best indicator. And if yesterday you would have lost a little bit of money, go back 2 days or 3 days if you have to. And that's usually all you have to go back. And you'll see that over 3 days, if you had just followed your trading plan, you would have done very well. And if you can't say that, then you need to look at your trading plan. But after that, that gives you the incentive to do the right thing and stick to your plan, at least part of it,
Mhm.
So that's something that I always advise, looking back on yesterday's action.
Oh, yeah. Well, you also mentioned, what are you doing lately? When you and I spoke not too long ago, you'd already started into qualifying for prop accounts, and
Mhm.
you said you've been getting more, even more busy with it. So yeah, tell me how's your journey?
Well, that's another thing. We can bang people over the head, you and I, with the importance of the mental and emotional piece in trading, and why it's equally important, if not more important, than the plan, because you only have one head and you got all these plans out there. So, you know, um, if you can take the pressure off people, um, that's a big advantage. And when I saw this prop trading, where and there are several firms that do it. Most of them do most of them do futures now. There are some that did forex. I'm sure there's still some, but they've stopped that. They've pretty much gone to futures. I'm sure there's options and stocks too. I haven't looked into that. Again, I'm focusing on the futures. And, it's I looked at it and I said, if I can trade their money and make 90% of the profit, in fact, 100% of the first 25,000, if I can do that, why would I trade my own money? I mean, I used to do it for 20% of the money and it was high pressure. I had to go. Now I'm in the house. I can trade somebody else's money, and not small accounts. You can trade a $250,000 account, 150 or a 50, depending on where you're at or where you feel comfortable. And you can trade multiple accounts, so you can do that. And if you're not risking your own money, there is a level of anxiety that the cortisol level drops a little bit. Now, as you get older, it's not about the money, it's about the time. You don't, I mean, we don't want to waste any more time. I mean, I don't want to waste time. I want to do the right thing. And so, if I don't take their money seriously, I'm just going to be spinning my wheels and losing their money. And generally, most traders never get to the point of losing their money because they never pass the qualification, even though it's relatively simple. Yeah. So they ask me, well, how can I give you 90% of the capital of your profit? How can they do that? How do they make money? Well, they're charging you, even during those sales, they're charging you $40 and $80 a month to pass, of which 90% don't pass. Same percentage as in our business in general. And so they know that train is going to keep coming no matter what happens. They're not in the gambling business. They're not in the trading business. They're not even, there's no gamble for them. They're just collecting. In fact, when you blow out an account, all you got to do is pay another $80 and set it up again, start the test again. So that dilemma that I talked about before, where I was trading somebody's money, and if I was down 3 or 4%, you'd have this feeling, should I get more aggressive and try to get up? And if you're trading somebody else's money that really doesn't have a face to it, I had to talk to these people every day. Right. And so, you can start to think I'm going to get really aggressive, because if I blow it out, I can start again for $80. Well, those $80 add up, and they know that. But if you're serious about it, and one of the things that, you're a real detail guy. I can say that everybody knows this about you if they've been on your list for any reason. You're an orderly guy. I'm sure your sock drawer is, perfectly, me, I got to look for the pair, I got one, honey, you got everything lined up. I don't have that, but listen, what we do, is always been the tough part of the business, again, because, and I think that prop trading allows some of that cortisol level to go down. That's if you frame your trading as a business, that's really my point. I think traders have to frame it as a business, and we got mental trainings on it, and I talk about it in pretty much any large course that I have. There's got to be an area where I say, you're not trying to trade. You're not, let's see what happens. It's not a hobby. It's a business. You have to, and when you lose money, when you have 2 trades in a row that lost money, that is akin to putting an ad in the paper and nobody came, nobody called. You got to do it. Not what not to do now. And now, now you do something else that makes sense. So the idea is that if you frame everything as a business, and that there's going to be 60% wins and 40% losses, and if you keep your losses down, then that that 60% is going to happen if you stick to the system, and the net will be a lot of money for you. But you can't mentally get through those losing times. But in any event, prop trading is good because I believe I wrote a piece called "The Death of Simulated Trading." I mean, why would anybody simulate trading? I mean, there's no, you're really not, the goal, of course, is trading your own money and then having high anxiety and getting into that if you haven't framed it as a business and you haven't taken any time with your money. This is what the 90% are doing. Let's see if I can do a sim. And then once they get a sim, they start trading, they lose money, they say, let's go back to sim. So it's like a dance. The sim real money dance, and it gets nowhere, So why not make it, and this, why not, you're a process guy, why not have a different process? The process is, let's have a goal in that simulated trading, because in the evaluation stage of these of the prop trading, you've got to make, for instance, to trade a $50,000 account, you've got to make $3,000 before you lose 2,500. Mm-hmm. Okay, yep. So that's, now they have a little shtick in there that's that a lot of others don't have, where they count open trade equity. So if you were up $1,000 in the trade and it came broke even at the end, you didn't take it, all of a sudden that 2,500 is 1,500. So they want you to, so when you're trading with these prop trading firms, you're going to understand their rules, and that rule, for instance, can be countered by always taking two positions when you trade, or treating everything as two positions. So whether you have four, so that when you, because the problem is, it's the same dilemma between traders who day traders and scalpers. The scalpers are scalping, taking the low-hanging fruit, and then all of a sudden the biggest move since the beginning of time, and they say, why the hell didn't I stay in there? And then you've got the person who takes the moonshots all the time, comes right back and says, I should have taken that low-hanging fruit when you got it. Well, when you take two positions and you treat one as a scalp, and then you move the stop to break even on your runner, you've solved that problem. Now you're trading with confidence. So if you understand the rules, like I've just mentioned, how open trade equity goes against you. I hope we're not losing people with the math. But you have a pretty good, if they're on your list, they're pretty good at math. So the idea is that
hopefully they get the math.
What's that?
If they're trading, hopefully they can.
Hopefully they get them. I think that's not true a lot of the time. But the idea is that, so if you treat it as a business and understand the rules, and then adjust your trading. I didn't really adjust where I got in based on that rule that I've adjusted my trading plan for. I won't take a trade in this when I prop trade without having two positions. And if the risk is too high, I'll go to micros. I have no problem with trading a $150,000 account and trading 4 micros, if the risk is gigantic, So I think everybody has to just stop with the ego, of course, which is easy to say because you and I are egotists, and so is everybody else to some degree. But you have to tone that down. I think as you get, there's a difference between wisdom and smart. I think I take back that you and I are egotists. Everybody has egos, is what I'm saying, and that I think that gets in the way if you don't recognize that about yourself, and because what's happening as you're trading, and offset it. But again, it's back to what we talked about: understanding why you're trading the way you're trading. When you're when you're using a tool, when you're using an indicator. I mean, why should you use MACD when you're using RSI? I'm not sure. I never understood that. Maybe somebody can explain it to me. But they're both relative. They're both momentum indicators. They both have their place and so on. Some prefer some over the other. But I don't know why anybody would have two. And it just messes up the chart. Actually, the more you have to look at a chart. Anyway, back to the trading of sim trading. So I think that when you have a process of simulated trading, meaning that you're simulated trading through your testing. So you have a goal, and that's to get funded. Because when you make that $3,000, they will give you they'll put that money in your account. It's not you're logging into their back end to trade it, but the money is there, and you're trading the $50,000. And I won't explain that it's a pool of money and it's not fungible and so on. But the idea is that you have $50,000 now that you can work with, or $150,000, because you were smart enough to run a system that made $3,000. Now, now when you're sim trading, you're doing it with some responsibility, and you're getting a lot further than just trading it with, no other goal but to trade your money and be a little bit more fearful, So I think as this prop trading gets more popular, I think simulated trading is going to fade. Really? Because why do it when the result is going to be trading somebody else's money for that kind of return. And when I started getting the checks, 1,000, 2,000. All of a sudden, the checks they wire it into your account. All of a sudden, it was real. So that thing I had a year and a half ago, or come on, that's bull. No, nobody's going to give you 90% of the money until I looked into it and I saw the fees that they charge for the people who don't pass. And I said to myself, why am I in this business? I should be I should be in the prop trading business.
Well, they figured out a different game.
Yeah.
I mean, if you think about it, it's hilarious because with trading, one thing that's always cracked me up is how there's historically been almost zero barrier to entry to trade.
Mm-hmm.
It's like if you've got money and you can open an account, you can trade. Period. Doesn't matter, smart, stupid, short, tall, skinny, fat, doesn't matter. If you can open an account, you can trade. And now they figured out a way to even eliminate that barrier. If you got a little bit of money, now you can trade. And they're
Yeah, I mean,
money, but they figured out the game. They just charge you to come in the casino now to start with.
well, look at the lengths, because everything in the market is compressing in time, but the idea of having a daily option or a weekly option, man, it sounds crazy to me. But that's for you can get that for 10 cents. So I've never traded them, but there's really no way to go. But look at all the people that buy lottery tickets. I mean, I have been seen buying a lottery ticket when it goes up to 200 million or something. Then it starts to be worth it for a buck. See what happens. But there's a lot of people spend a lot of money and time there, and that's probably the worst bet in the world. Then as we come up, Forex was in there for a while. Forex is a tougher market, I think. Even though I mentioned that I like trading the currencies and so on, I think that people. The environment when you trade in the Forex market is the Wild West. Especially if you look at some of the social media posting, everybody, I just blew out another account, I just made $1,000, it's, but everybody has to develop their own parameters. It's all about looking inside before you look outside,
Oh, well, you mentioned a word a minute ago, and I'm glad you did because it was one that I was paying attention to a short while back, and it's a really good reminder and kind of appropriate at the same time. One of the key traits that I've seen in practices for traders is just self-awareness.
Mm-hmm.
Yeah, like you were talking about, as far as paying attention, where you were yesterday and that kind of stuff, but especially right now, and in all regards, self-awareness is one of the key things with
well, what's your definition of self-awareness? Is just the fact that we're aware that we're here and breathing? I mean, it's got to be more than that.
Well, it's being I mean, knowing that you're here in the present moment, but it's also the act of self-observation. I mean, that's what awareness really is you're being cognizant of things and you're noticing them. You're paying attention to them. So it's like, as you're going through your trading day, of course I'm aware that I'm here and I'm looking at my chart and everything, but am I paying attention to how I'm feeling and how I'm thinking and the thoughts that are running through my head, the conversations and how I'm responding to things? Am I paying attention to those, or am I just kind of responding on a like almost subconscious level? And I'm just going through things and I'm not really even aware of myself and what I'm doing. I'm just kind of caught up in the moment, or, my emotions or my head or my thoughts. So just staying self-aware is one of the huge ones. And I'm sure same with you, people that I work with, as they develop the self-awareness is really when they start to see the growth. And
I mean, I believe that, we've talked about it before, and the last time I was in my car, I think the last time we talked about it. But the idea is that, I think it's all, listen, what's in your subconscious mind, exactly what the dominant neural net is that's driving you, because your conscious mind can say anything you want to yourself, but the subconscious mind is going to create the response. So if you keep missing trades and taking, being controlled by fear of some sort, so you need to reprogram your mind literally with we have the meditations to do that. So, combination with working inside and outside has always been and then understanding what self-awareness is from a conscious level, like you've just explained. So, good. I mean, it sounds kind of airy-fairy, but the idea is that, it's important,
Yeah, actually, it's not airy-fairy. It's actually, intelligent. I mean, if you think about it, in any performance activity,
Mhm.
whether it's, golf, tennis, any other, any
Well,
sport.
you were a review guy, right? I mean, you reviewed systems, I mean, that was your thing, wasn't it, before you got started trading?
Well, I was a quality assurance manager, so yeah,
Yes.
processes and
Isn't
systems.
that what I said? Yeah.
Yeah,
Quality insurance manager. Yeah.
yeah. But yeah, the awareness, in any performance activity, you have to be aware of, what you're doing. You still have to be present in the moment, but you can't just get lost in the moment either. It's that real heightened state of awareness that lets you perform well. Um,
Well, what about the emotions that that stop you from changing what you, is it through the understanding of what the right thing to do is that you'll change? Is that how you look at it?
um,
I mean, if somebody's being self-aware and understanding what they're doing and seeing a problem in their trading because of, we'll concentrate on the trading part. If they see that, they're constantly missing trades, and somehow how do you respond to them in that respect?
well, if they're making the same mistake over and over again, to be aware, I mean, first of all, they need to be aware in the moment that, yeah, okay, I'm kind of repeating the same pattern. It's kind of like you have to step back to different levels of awareness or observation. Because you can be sitting there, and you make the same mistake and like, damn, I made the same mistake again, and you become aware of it then. But it's also, you need to step back. It's like, okay, well, instead of just noticing that I screwed up again, it's like, okay, let me look further a little prior to that, and it's okay, what was triggering that? What was actually going on in my head at that moment? Where were my eyes looking on the chart? And you expand what you're noticing, and again, you're being cognizant of.
Mhm.
Instead of just this one thing that, oh yeah, I'm just, I'm watching the candles form, and oh crap, and I'm jumping on that. It's like, no, am I noticing my breathing? Am I noticing my emotional level? Am I noticing my posture? And, just like I said, you
Well,
get
and when they
heightened
notice
awareness.
when they notice they're breathing heavy and their posture is not there, what are they're supposed to correct it right at the moment? Is that how you see it? It's kind of like NLP, Tony Robbins, where your motion is.
Yes and no. A couple of different things. First of all, trying to deal with it when you're in an emotionally aroused state is generally not the time to do it.
I say,
You really need to take note of it, but as far as when you're going to address it and how you're going to address it, that's when you want to take that process over to when you're more, calmed down, and you're not all worked up, and you can look at things logically and rationally and say, okay, yeah, here's what's going on, and here's what's causing it, and here's what I can do about it to, prevent it's happening again. But yeah, I mean, and this actually, you're talking about airy fairy. This one book that I got actually was a gift from one of my clients. He sent this book to me. It's called the Handbook to Higher Consciousness, by Ken Keyes. And he's got the 12 rules or 12 pathways to higher consciousness. And one of them that I really liked was, and now it was in dealing with other people, but it's pertinent to trading. He said, if you're in an emotional state, and you're angry or whatever, don't respond, don't engage other people until you can calm down and come from a better state to engage with them. And so kind of the same thing with trading. It's like, or really any other situation. If you're all emotionally worked up, your rational mind is only engaged partially at best. And so that's not the time to deal with it. You need to wait until you calm down, and then you can approach it rationally and actually attend to things in a sensible manner. And same thing with the trading. I mean, actually one of the questions I wanted to ask you today, as far as what's your opinion on comfort zones? Because I've had this conversation with other traders over the years, and some people say, yeah, it's good to be trading outside your comfort zones because, that's when you're going to be learning and stretching them and all that kind of stuff. And others, and like me personally, I don't think you should be trading outside your comfort zones. What are your thoughts on the matter?
yeah, I agree. I mean, I wouldn't be trading out of my comfort zone. I mean, I think that's where people get into trouble. I mean, that's really inviting. I mean, some people can do it to stretch I mean, if you're trading one contract and doing very well, to move to two contract and expanding your horizons is a process that you've defined before, but and it may be stretching your comfort zone for a day or two until you realize, it's really the same movements, and it's got twice the effect because you've come across it in a logical way. But to trade out of your comfort zone I guess, do they want to match the market? Do they want to match the excitement? Do they want to kind of be one with the market? Is that where being in the stretching your comfort zone? Because when those markets start to move around, you've got to be the Zen guy in the room. You've got to be the quiet person in the room, and you've got to figure out what you're going to do before the report comes out. And then when something happens that you didn't figure, you've got to realize that this is a time to learn, and you do nothing. So one of my favorite expressions, my wife always brings it up, is doing nothing is doing something.
Sure.
Doing nothing is doing something. I mean, as a trader, you can remember the time, I'm sure in the beginning, I know I had them, where I get my monthly statement, they were printed out, and I have a certain equity at the top, and all these trades, page after page, and at the bottom, the same equity. I'm saying, all this effort, stuff that I've been doing, it's getting me nowhere. It's almost worse than lose already. And this way I can do something else with my time. But and I think that what I was doing then, as far as comfort zone, is whenever I had a great day, I try to have another bigger great day. I'm on it now. I got it. And so I was expanding and then contracting my comfort zone to back to the facts, and I know build it back up. And so, that's what this sheet, those are a series of sheets would show me. And that certainly has a relation to comfort zone. So no, I mean, why would anybody want to? I mean, do they believe that it's instinct, or it's the first step to bravery, and you have to have balls to trade? Is that what it is?
Yeah, I think it's along those lines. I mean, for me, the main argument against it is really, I mean, just looking at the definition of, your comfort zones. Your comfort zones is where you're okay, and outside of your comfort zones is where you're emotionally worked up to a certain point.
Mm-hmm.
And it's like, so if you're trading outside your comfort zones, by definition, you are in an emotional state, which is not good for rational, good decision making in your trading.
I mean, that to me, it's certainly outside your comfort zone doesn't mean off your trading plan. It means position sizing, right? I mean, is this trading outside the comfort zone? I mean, certainly nobody's saying you should trade out that outside your comfort zone means you see something you think would be a good place to get in, but you've never tested it or back tested, but it looks like, and the news just said it was going to, and you go, that to me is not outside your comfort zone. That's idiocy. I mean, that's, if you know better, that's asking to lose, but if outside your comfort zone means play bigger, then, we're back to what we do. I mean, I think if somebody wanted to play bigger, they're very good at trading, 2 positions, and they want to move to 10, but every time they do, that gap that happens, coming to you or I for that area, for the mental area, that would be the key, and to set up a process and with goals and accountability, that kind of thing. That accountability. If I had, you do a lot of accountability. I don't do it. Not that you don't, but that's really it's one of the main things that you do. No, with traders, with your coaching.
That's part of it, of course.
Part of it. Yeah, I mean, it sounded very. I mean, we do coaching, but we do what we call laser coaching,
Right.
which is we give them unlimited, but it's only 15 minutes. Maybe it's stretched to 20, but it's a lot of time. When you're being. But I think accountability is. I just read something on that myself, and it just clicked to me, because I think of myself. I want to. Take this vitamin, for all of a sudden I'm looking at my vitamin place. There's 18 vitamins that they're half full, and I got onto another great vitamin that I think is going to have me age more gracefully. So it's follow through anyway. Yeah.
Well, the main thing, I mean, accountability is part of it, but the biggest thing that I've been trying to stress to people over the last year is, regardless of where you're at with your trading, get outside help. Because the markets are not going to teach you. They're just going to punish you for not trading properly. And if you're not where you want to be, then you need that outside perspective, because otherwise you're your own limitation. This is not an occupation that lends itself to just being figured out.
Mhm.
And you're always going to be stuck where you are because you don't know what you don't know and you can't see what you can't see. And you need that outside perspective to help, because otherwise it's just you and the charts. I mean, that's the allure for a lot of people to get into trading is it's like, yeah, it's not a real business. I don't have to mess with other people. I don't have to set up a store. I don't have to do any of that stuff. It's just me and my computer. But that's also a liability with it too, because yeah, it's like when somebody comes to you, they're getting an outside perspective that they never would have had on their own, and the
Mhm.
markets aren't going to get it.
Which brings me a question to you.
Yeah.
I know I'm being interviewed, but I have a question for you.
Oh, yeah.
Uh, and that's trading buddies, where two people get together and make themselves accountable. What has been your experience when you've encountered that with people?
Well, depending on who you partnering up with, that can be a real slippery slope, because I mean, I've experienced it, and almost everybody I've talked to, they experience it too. Is if it depends on where they're at in their trader development. If they're more mature and more successful than you and they've got more experience, then it's likely that it's going to be a beneficial relationship. But if they're like way behind you and they're doing
Right.
all stupid stuff and they have the wrong perspectives on things, but they're also saying, hey, what are you doing? Oh, you should be doing this, and they're like throwing suggestions and input at you that's counterproductive, then it's not a good thing.
Yeah, most of the time it doesn't work, I've seen, but those that it does work, they have rules. What they talk about, what they and just kind of keeping and trading at the same level. It's because if you're trading with somebody at a higher level, and yes, you can learn from them
Mhm.
if they're that patient. But if the gap is too big, they'll get frustrated with, hey, I'm not here to teach you. I want something out of this myself.
Yeah.
So.
Yeah. Yeah. Like I said, you gotta be selective about who you're buddying up with. That's the main thing. It's got to be a good fit. And it's got to be just like any other relationship. It's got to be a healthy relationship. It's got to be good for both of you. And if it's not, then no, it's not going to work. It's not going to be helpful.
Mhm.
And the other part of it is hopefully you're both also pursuing growth, so that as you grow, they're growing too. Because
Mhm.
otherwise you're going to leave them behind, and then you got to find a new buddy that's at where you're at now versus where you were 6 months or a year ago. So, well, speaking of your laser focusing and coaching, what all have you got going on right now with over at the Discipline Trader? I know you're always staying active. You're an innovator.
Well, the core has always been the mental and emotional part. But I'm going to say you almost can't run a business on it. You can run a business on it. You can run a bit, but it's tougher to, if you and I had chosen in this same field, you know, uh, trading plans and suggestions and market analysis, that's an easier path because that's what people want, that instant gratification. But so I've always, that's why I've always stayed connected with you, and I've always had a love for, because I know how important it is, and I feel like I'm holding the baton for this area. But yeah, our basic thing is the mental and emotional capabilities of traders, and we do it through two major areas. We do it through those subconscious trainings, like the 8 and 10 minute meditations. I remember when I first asked my wife to do the meditation, because she's a subconscious trainer. I said, we need, she says, okay, there'll be about 20, 25 minutes. I said, no, traders are not going to sit there for 25 minutes. They're not going to do it before they trade it. 5 minutes. Can you do it in 5 minutes? She says, I can't do it in 5 minutes. I said, all right, I'll get somebody else to do it in 5 minutes. She said, oh, well, hold on a second. So we compromised. We compromised on it's 8 to 11 minutes where you get so you got those meditations that change the neural pathways that result in the right neural net to run your trading decisions from a subconscious standpoint. So we do that. We also use something called EFT, emotional freedom technique,
Yeah.
which you're probably somewhat familiar with, being a student of just about everything. And I think it kind of combines Eastern Western technology in a where you're tapping meridians while saying things consciously, repeating after us in our videos, and whether it's taking trades without hesitation, stop over trading, revenge trading, which was big last year for some reason. It was a high jump in revenge trading.
Right.
But those kinds of things, you can separate the thought from the emotion literally in one 5 or 6 minute session. Sometimes you got to do it twice. But when you can take the thought from the emotion, I mean, most of the things that you've just talked about in the way you approach the mental and emotional capabilities is attached to an emotion that you need to analyze and adjust. And so when you can separate the thought, actually you stop when many of the people can't even remember the thought that they had after the 5 minutes, and you're not closing it. You're just repeating things and opening up these chakra areas. Now, I'm not a holistic doctor, but I do think that there are energies that run through your body, and I do think the Eastern philosophy has it down from a preventative standpoint, and Western is putting out the fires pretty much in our philosophy for medicine and so on. But together, it makes a lot of sense where you're stating situations, opening up chakras, and it works. They used to call it the 5-minute phobia cure. But the guy who invented it was, they started suing him because they couldn't say, hey, you can't say cure. It's managing, you're coping with. Nobody cures anything because that stops the paychecks from coming in. So we've got the EFT, which are these follow along EFT sessions that we do. We got that, and then my latest love is the prop trading, because I was talking to you about who's on our lists. Everybody on our list is pretty much passionate about making money in trading for whatever reason. Some a little bit more desperate than others, but there are a lot of traders on my list that don't have a lot of money to trade. They're trading with 5,000, 10,000, 15,000, and that may sound like a lot of money to somebody, but in this market, if you're going to keep that cortisol level down and keep those emotions out of it, one of the main things you can do is have a large account, but trade it like it's a small one. When I trade, I've qualified for 50,000, 100,000, 150,000, 100,000. When I trade the $150,000 account, I treat it like about a $70,000 account. This way, any emotions, so I frame it differently. So that I'm staying in the game, and my trading plan gives me the progression that I want. This is the process that I think is available to people with not a lot of money. Here they can understand how to trade. They can, instead of sim trading, they can be qualifying for something. And then when they get that goal, they can use particular, not only we can help them with the mental part of them, but also some of the things that we do, like the 2-position situation that I talked about, eliminating that grand question that everybody has. Should I stay in this position or should I take my profit? Well, when you start out with a plan to do both, and keep your risk reasonable, you take that question out. And that is a major question. There's about 3 or 4 or 5 of them. And we don't have the time to go through them. But the idea is that if you can have a new trader, without not having to use their own money, qualifying instead of sim trading, having, yes, most traders, they've lost 5,000, 3,000, but it's hard, even with $100 and $200 a month for qualifying for, depending on how big an account you're qualifying for. Even with that, even if it takes you 6 months, a year, you'll never get close to what you've been losing by straining yourself and trying to trade your own money. And if you do it right, you can qualify in a month or 2 months easily, And when the checks start to come in, everything becomes real. And now you're saying, I have something that's a business. So my plan now is to have 10 accounts, 10, 50 or $150,000 diversified, and then have what they call a trade copier, where you put in, I bought it last month, but I haven't installed it yet. So I'm still running around, with each account. But the idea is that they should be, you can just put in one trade, it'll diversify, it'll put them in different accounts, and at the levels that you want. You can put 2 in 1, 3 in 1, and it'll even take the micros.
Right.
If you at the same time. So there's ways, if you approach it as a business and not a hobby, and look at, especially if you're trading small money, and you're I think this prop trading is like a dream come true.
If you do it right. If you do it right, yes.
If you do it right, I've just grabbed Prop Trading University. I can't believe it wasn't taken. Prop Trading U and Prop Trading University. And I'm going to build something that, that will be the place where traders will gather.
Excellent.
And we'll sing together.
Yeah. Kumbaya.
That's right. We'll drink the Kool-Aid all together. That's right.
No, that's cool. That's very
Anyway, so I have the idea, but you need the time to do it.
Mhm.
And there's a lot of elements to that. So I may start out small with it, but I got the URL because I do think it's going to be a growing part of the future.
Yeah.
Um,
Oh, yeah.
so
Well, yeah, I don't see it going anywhere because for the prop firms, I mean, it's a good business venture for them.
Mhm.
I mean, obviously they figured out how to organize it so that it made business sense for them. And it does open the door to a lot of people who otherwise wouldn't be able to get into the trading game.
Yeah, and I'm noticing though, it's not only independent companies that are doing it to start it, but it's companies that that have trading platforms and whatever, and are putting in another stream of income because they've and make it a vertical. They've got everything that you need. They're the vertical, so
Yep.
it just makes all the sense in the world. So but there's a big difference if you have a diploma from Prop Trading University. Who knows?
True. No, that's
It's
cool.
good. So
And yeah, we'll have to talk about that on a separate call.
yeah.
Yeah, fun stuff.
Anyway, so for right now, it's thedisciplinetrader.com, and anybody can connect with me in the contact area. Just write me a note and so on if they have any questions about anything. But
Excellent.
um,
Cool. Well, Norman, this has been a lot of fun, man. It's always great catching up with you. And cool.
maybe we did a little too much kidding around, but I think that it's important for traders to know that we're raiders. We're traders just like them. We're people just like them, and it's just that we have taken this very seriously about the mental part of it. And yes, there's probably people out there that somehow naturally have the mental capabilities. And for instance, if I was trading an Olympic athlete to be a good trader, I think I could do that very quickly because an Olympic athlete knows the importance of the mental game and keeping the emotions out of it. So if I was picking a jury of traders that I could trade, I would definitely take any athlete. For instance, a professor I probably wouldn't take, maybe because I don't want you don't want questions. Not everything's a question. You want answers. So once you have the answers, you don't have to make up any more questions. So it's too much. I have a brother-in-law. I call him the question man. It's very hard to get anything past him. But anyway, it's all good. It's all good.
Oh, excellent. Yeah. Well, Norman, let's do this again sometime soon, man.
Absolutely.
I definitely want to definitely keep in touch with you as you continue on your prop firm journey and with your new idea you got going on here.
And I love I love the beard. I when we first got on, I was akin to George Clooney, but apparently that's what I'm seeing him with. Maybe I should. You're inspiring me.
Well, we'll see how long it lasts. Being this time of year, it's already getting a little warm and itchy, so we'll see.
Yeah, here we go. Another excuse. All right. We're not supposed to have excuses. Okay.
Well, anyway, yeah, Norman. Hey, and everybody who's listening. If you're concerned about the mental game, if you recognize its importance, Norman's been in this game for a long time, one of the best there is, and he's definitely no matter what's going on with you, I can guarantee he's run into it before, and he can definitely help you out. Hit him up at the Discipline Trader. Besides that, he's just a good guy, and you can tell, he's human. He's a lot of fun.
You better have a sense of humor if you're going to work with me because life is too short, right?
True, man. Yeah.
Because this will take the years from you. An unsuccessful trader, I think, lives 10 years less than the average person. A successful trader lives 10 years more. I'm not sure about that study. I have to check that, but I think it's probably true.
Oh, there's merit to it. Sure. Oh, yeah, indeed. Well, anyway, everybody, swing by.
All right, my friend. Be well. I appreciate it.
Norman, thanks for being here, man.
Okay.
Talk to you soon. Take care, man. Thank you for joining us today on the Consistent Profits Podcast, brought to you by Inside Out Trading. Make sure to swing by Inside Out Trading and pick up your copy of The Proven Formula for Consistent Monthly Profits. If you enjoyed the show, make sure to subscribe on your favorite channel, and we'll see you on the next episode. Cheers.